Hi everyone, this is Kathy McMillan and Zach Smith, and we're here today. What's up on tax? Yes, April 30th is coming soon. How can we best prepare? How can we be the most effective with the least amount of grief? And that's our subject today. I'm going to welcome back you snowbirds. I know you leave in the fall and you come back in April to file. We're right here to help you. I'm going to pass it right over to Zach. Zach, who's in charge of innovation in our team, chartered accountant, and financial planner extraordinaire. Jack of all trades, good at all. So over to Zach. Help us.
Well, I've got the help to start, but I like starting it out a little bit tongue-in-cheek this time of year. It's something we look forward to, kind of like after Christmas when you get that first visa bill. I'd relate it to that. The other thing I'd like to relate it to, the dentist, for anything other than a checkup, cavities and stuff like that. This is an exciting time. And so with that, Kathy, we're going to put our hand on our chest and raise our right hand.
Oh, okay, got it.
Do a little bit of mindfulness to start. And we hope you all join us here. This can be a stressful time. So just a reminder, let's stay mindful of tax season. We're going to get you as prepared as possible with this and what we're going to talk about today. But things are going to happen. There's stuff that happens last minute every single year. And if we just come in with a bit of open-mindedness around that, I think that's going to put us all in a better position to enjoy ourselves heading into spring. And us in Calgary, we're getting 30 centimeters of snow today.
Good for us skiers.
Good for us skiers. I might get a session in today.
Yeah.
But let's focus on those enjoyment pieces and we'll get you prepared for the other for tax season here, because it's important. And let's have some grace for our accounting professionals. They're busy at this time of year.
Oh my.
I know in talking to them, it is, yeah. So thank you to them and some gratitude there. So with that in mind, getting prepared is an important piece that I'd like to thank one of our team members, Mona, who's not joining us today, but is instrumental in helping all of you out and putting you as our clients front of mind here. And it's just been fantastic. So I'm going to be speaking for Mona today. But a lot of this comes from her ingenuity and being thoughtful. So
systematization in her processes and being a dragon.
Yes, and we thank her for all those things. So where do we get started? Well, you would have received an email in the past month and a bit here called Important 2024 Tax Information. And that is your best resource heading into this season. And those who have been with us for a while have seen this email before. We update it every year. And it's just got all the steps in being prepared for tax season leading up to April 30th. So that's our guide. I'm going to be speaking to some of the pieces that are in there. What that has, it has all the dates where you can expect the different tax slips to come out for your accountants. And it would be nice if they all came out on one day, and that day was January 15th to give us 3 months to prepare. That's not the case. That's something that's out of our control. But we work as best we can in that regard. And so that email, if you haven't already bookmarked it, I'd suggest you go back and find that email. Probably should have received it in February or here in March, depending on the timing where you sent it out. And again, that's Important 2024 Tax Information coming from the McMillan team, coming from Kathy, so and Peter as well.
So it's our Bible, if
it
you
is.
will. Great
point of reference for you and your accountants as far as when we expect things. The next piece where we focus is and thanks to all of you who have signed up for your My Richardson Wealth portfolio, or your My Richardson Wealth portal. You got it. And what that allows us to is we post all of those important tax documents and slips, as well as what I'm going to speak to next, which is the tax slip checklist. Very important. And that's, again, I'm going to touch base on that. But the nice thing is, if you are signed up for the portal, that's your hub for all of those tax documents to kind of hopefully digitally prepare and send safely to your accountant. That way is one means. For our other clients who prefer those mailed documents, you will still be receiving those as long as you haven't signed up for online only information from us. So if that doesn't ring a bell, still expect, and we'll be mailing your tax slips to you, those physical slips, if you prefer that package. Actually holding some of those nice documents.
I like paper, but the issue is envelopes come in, it should come in a colored envelope to bring your attention to it. So even if you think it's junk mail, open it. Now, personally, I'm not very tech savvy because I have a team. But
You are tech savvy.
Thank you.
You're welcome.
You're very kind. But I love the portal, and it sends me a little message when something arrives. So in I go, print it off, of course, print it, send it to my accountant. Now, were there things that don't hit the portal?
Really good question. That was it's like we practiced this going in. No, that was perfect. There are some tax slips that you receive, mostly from mutual fund companies, that do not come directly to us. So there are certain tax slips that you'll see on your portal that are received from our team and Richardson Wealth, but there's also some slips that come, depending on your investments, from mutual fund companies, and those are mailed directly to you. So those, I don't want to say are trouble, but it's just a point of awareness, and that leads me into my that important document that is on your portal and should have been mailed as of March 13th. So you should be expecting it in physical mail and or it's on your portal currently, is that tax slip checklist. And good point, Kathy, on those documents that go directly to you as the client from those investment companies. They will be labeled on that tax slip checklist. You'll see something like the actual fund company and their name there. So just be aware that that's something that might not show up in your portal. It's coming from those investment companies.
Okay, so a little tricky. Now, one thing, when you have the checklist and it lists all, say, for example, mutual fund companies, great to go by that. However, one little exception, if for whatever reason we sold that position and you no longer have it, it could still be on the checklist. So just check in with us and we'll double check on that. But remember, if the position was sold prior to last year, so the year before, it will still be on that checklist perhaps, and perhaps you shouldn't need it. So just a little bit of ambiguity there.
That's a great point. And it was on my list, but you are covering things that are fantastic value to the, yes, exactly. We're doing a little telekinesis here. So that is, I guess, the main points there. I'm just going to go to that important email, just make sure I haven't missed anything here. But go ahead, Kathy.
Also, there's some changes as per our email for RSP season. Once in 4, there's 1 day more. We like to highlight changes. And for a number of years, the capital gains, capital losses. Now we seek to only have gains, but those were sent out on a deemed disposition summary. Why they didn't call it a capital gains, capital loss beats me, but so be it. And those always came a little bit after, not early in April. But this year we have a change on that.
You got it.
And finally, they're putting it on the T5008.
They are. So
the adjusted cost base.
One of the tax slips you will see, and you have seen in the past in situations where we have made a sale of a security or an investment, and there's what we call what you all know as a capital gain. And previously, those T5008 forms that we used to send out wouldn't have the adjusted cost base or the cost base on them. And so we would send that trade disposition summary, again, different names for different things, but that would be us supplementing you and your accountants with the information in order to do the tax work of that difference between the proceeds of selling that investment and the cost base. So it was nice that I guess that happened last year and will happen again this year, where those T5008 documents have all of the information we need, being the proceeds and the cost base, in order for your accountant to file your taxes appropriately.
Yay.
There's always a catch, Kathy. So I think a good point to touch on now is there are some clients, and for those of you, again, who have been with us for some time, you're used to this process, but we do mail out, and you'll see on that important information email that there's something called a late TDS, or late trade disposition summary. And the simplest way I can put that is some people with certain investments will be on this trade or this late TDS mailing list, which comes out, everybody's going to cringe at this, about mid-April is when we receive these reports. And the short story is the fund companies and certain investments are allowed to make certain adjustments to the cost base of your investments. Without getting too much into it, we've got to wait until they provide these numbers to be able to get you the proper information to file your taxes. So our team's very diligent about this every year. You would or you will be receiving an email if you are on that list. And the good news here is, I love good news, is we would suggest to your accountants, or just making a note to your accountants, we can put all of the other information in the slips that you have accumulated to date into your tax returns, and that's just hopefully 30 seconds to just breeze over that late TDS for those who are on that list, and then be able to click the button on file or e-file or however your accountant does that.
So in this case, the early bird does not get the worm. Don't rush. Amending is a pain in the neck. Wait till you get all your slips. Much easier for all involved. Accountants will appreciate this.
You've got it. Yeah. So the other thing I just like to mention this time of year, and it's more points of awareness, is a lot of people and accountants as well use the autofill option on your profile. So if you have or if you're filing on your own, you have that option to upload your tax slips to most tax filing software. Now this is a good start, but I always caution at this point in time, and just a few things here, it's always good to double check those values, because it's not just an upload and hit send situation in most cases. We talked about the T5008s, and we've got to appreciate that you might have investments elsewhere as well in some cases.
Heavens.
Right, Kathy? We're shocked, and we'll talk to you about that. But there are situations where maybe those slips and those different investment managers don't have the cost base, for instance. So we've got to be diligent in filing your taxes. T5008 being one of the things where it doesn't get auto-filled. RRSP contributions are another one that don't fall into, or you need to check twice, as Santa would say it. And then the final one being in those situations where you have a non-registered fee-based account where we're able to use the carrying charges deduction.
Important.
Very important.
Yes, we work hard to make us tax deductible as much as we can.
Yes, that again isn't a slip that would be subject to that autofill. So there are some pieces to filing your taxes in most cases where we can't just hit the autofill and file the taxes. That is, I guess, very close to what I wanted to cover in this. This portion. Is there anything else that's tweaking your mind, Kathy, as far as feedback to our clients?
Of course.
I knew you were gonna.
There's always something. Just if you're on an installment program, you had a big tax bill the year before, and now they want their money more up front. Just interact with us. Maybe you should be paying that. Maybe you don't need to, but the long and short of it is that if you owe the government, the interest rate is 10%. Like, yikers.
10 plus.
10 plus. So, if you're in this situation or you're a bit late filing, just maybe get some money out to them, because the interest rate is extremely high. Now, Zach and I have tried to figure out if they owe us what they pay us, but that's difficult to find, and I find that of interest.
Yes.
So I'm gonna drill down on that.
It's very important on, again, that late filing penalty being 10%. If we leave it, and like anything, you leave it for any point in time, they're gonna ding you even more. So it's 1% to 2% per month they'll get you. That goes for installments and if you owe at tax time. So it is something we were working with our clients proactively with this year, especially those in transition where they're coming from, perhaps going into retirement, had big incomes last year and installment payments. And how do we navigate that heading into retirement where we come off of those installment plans, or try to?
In the best way possible.
Yeah.
Yes. as with everything, when in doubt, just give us an email, send us a message on the portal, touch base. Maybe don't leave it to the last minute. I know it's kind of like Christmas shopping.
I was good this year.
You were. It was the day before Christmas Eve, I do believe.
Right.
When I lived in Ottawa, there was a whole cult following that would sit in their pajamas and mail their tax returns just before midnight. I suggest maybe there's other things to do, but you have us. We're right here to help you. We value you, and we want to give you value added always. So any questions, don't hesitate. That's Zach and Kathy.
And remember the pledge.
I think it was gratitude. I'm trying hard. I'm pulling deep.
I love that mindset, as you know, Kathy.
Thanks, everyone. See you soon.
Bye for now.
Kathy and Zach on What's Up Tax.